crypto for advisors, Bitcoin and gold, stores of value. The approval of the Bitcoin and Ethereum ETFs could represent a similar change in market to what central banks caused in gold markets post-2022. A new factor that, at least temporarily, overwhelms traditional narratives, including the store of value concept. In today's issue, Ilan Solot from Marex Solutions examines gold and Bitcoins, our role as stores of value assets and how this role changes over time. Then, DJ Windle from Windle Wealth explains how Bitcoin and gold are both stores of value and the differences between each asset in Ask an Expert. Sarah Morton, you're reading Crypto for Advisors, CoinDesk's weekly newsletter that unpacks digital assets for financial advisors. Subscribe here to get it every Thursday. The weakening store of value argument for gold and Bitcoin. Summary: the approval of the Bitcoin and Ethereum ETFs could represent a similar change in market to what central banks caused in gold markets post-2022. A new factor that, at least temporarily, overwhelms traditional narratives, including the store of value concept. The August market sell-off frustrated proponents of Bitcoin's store of value properties. After all, crypto was down badly while gold rallied during the week. To add insult to injury, Bitcoin underperformed when markets bounced back. However, despite the price appreciation, gold might also be losing some of its store of value properties. Price and narrative decoupled around 2022. Traditional investors continued following the decade-long pattern of selling gold as real. Yields and inflation expectations rose ahead of central bank tightening. The problem is that this time, gold went the other way. Why has the gold price not responded to its store of value macro drivers? A change in market structure. Asian central banks dramatically increased their gold purchases around the time of Russia's invasion of Ukraine and the seizing of its FX reserves. We might even say that these governments are following their own competing narrative. Russian, Indian, and Chinese policymakers couldn't care less about gold as a store of value from the perspective of a Western investor. Fed policy, inflation expectations, and libertarian principles will likely never influence the cycle of accumulation and eventual use of their gold reserves. Over time, the approval of crypto ETFs in the US could represent a similar disruption in market structure as the one seen in gold. It could shift the narratives around BTC store of value and ETH crypto tech play closer to a traditional investment asset. In other words, ETF investors may be following different narratives and demand functions, say portfolio rebalancing or disposable income, to crypto native investors the same way as Asian central banks buy gold for different reasons than traditional investors. Indeed, the recent ETF and Bitcoin price data seem to support this conclusion. ETFs continued to attract inflows despite the wild price fluctuations and shift in narratives around Bitcoin over the last few months. Please note that this is a very short time frame, so any extrapolation should be taken with a grain of salt. But so far it seems directionally right. In fact, the impact of grayscale outflows in BTC and ETH gives us a glimpse of how cycle-agnostic ETF flows can impact price. Does this mean that gold and Bitcoin are no longer stores of value assets? Not necessarily. Narratives can coexist, shift, weaken, and take turns leading prices. However, the presence of new, large, and different investor sets in both these markets is likely to dilute original narratives and change how prices react to macro events. Ilan Solot, Senior Global Market Strategist, Marex Solutions, Ask an Expert. Q. What is a store of value? Q. How is Bitcoin similar to gold? Q. How is Bitcoin different from gold? DJ Windle, founder and portfolio manager, Windle Wealth. Keep reading. VC funding for crypto. Startups grew to over $600 million in August, according to data from Defalama. Court filings show that the U.S. Securities and Exchange Commission has concerns about the FTX bankruptcy repayment plan, specifically the use of stablecoins. Uniswap settled with the U.S. Securities and Exchange Commission for charges related to derivatives trading.